Week 6, Day 3, Part 4. Assumptions. List your assumptions used to create the pro forma financials. Sounds real, what is pro forma financials? Well, I'm going to give you the definition on it. Pro forma financial statements are forecasts of the financial position of a company. Where does your company stand financially? At some defined point in the future. Pro forma financial statements are a critical part of a business plan and therefore are central to what are we doing? A business plan. Therefore, they are central to the development of a new business. However, pro forma financials are also valuable to existing businesses, just in case you get into a franchise or you're going to buy another business. They want to compare operations from 1 year to the next. And what have we been doing? Forecasting for the following 3 years. So exactly, from 1 year to the next. They require a research and reasoned estimation of future asset acquisitions. What assets are you going to acquire? Profits, debt, and cash flows, and serve to help shape the plans for growth for the business. If I own a barbershop, I would be so detailed to the fact I would actually know how many cuts that a barber was actually doing. Military fades, hot top fades, designs, specialty cuts, etc., etc. So if chair number 1, I would know that chair number 1 did X amount of those cuts that year. Well, I would break it down that week, that day, that week, that month, that year. So therefore, even if I change barbers, I would have this right by their name. I would have the detail by their name. So if as we talked about in the previous lesson, losing barbers, if I lose barbers, I still know how much that chair did based off such and such barbers. And then my intel, I would know, well, so-and-so was a great barber. So, you might have 2 people that came in throughout that year. So, let's say Mark was a great barber, but Larry was an okay barber. That could be the reason why the sales might have dipped in the later part of the year. But more so, that's for something else. But more so, you can use those, when they say year over year. So that way, you can always plan when your business is about to dip. You can use these statements, use what I just gave you, use that to know when is the business going to be down. What is our down season? So guess what? I can ramp up the marketing. Because why do you need the market during a period that's normally your best period? That doesn't make great sense. To focus on the periods, focus all your marketing efforts, majority on when you open a business and also when your business is normally down. How are you going to know it's down? Because you're going to look over those statements. You're going to look over those statements from the past and see when's your traditional trend of a lower income. Now what we're going to do, we're going to go a little further, look up the elements on a pro financial statement, which you already know is going to be a balance sheet, income statement, and cash flow. So real simple. Pro forma financials are often presented to the potential investors and the company to show the financial merits of the investment. Similar public companies must file pro formulas with the Securities and Exchange Commission. All right, if you're not going to be public traded, you don't have to do that with the SEC. But we're going to move. I just want to start with reporting on pro forma financials. We're going to move up to elements of pro forma financials. Pro forma financial statements should include balance sheet, income statement, and a statement of cash flows. A balance sheet, in this case, will show the projected assets and liabilities of the business. Liabilities, we went over that. An income statement will show the projected income or losses of the business in a given year. A statement of cash flows will show the projected liquidity and operating cash for a business in a given year. So pretty much this is just basically what? Your balance sheet, your income statement, and also your cash flow statement. That's simply it. Make sure it's accurate. I think we're going to have a great business plan. I think you all are going to definitely be successful in the future. We're about to wrap this up. As I stated earlier, I always state this. All the information that you start with, the business plan, is going to repeat itself in different areas. as you seen. We don't use three statements. We don't use three statements for about what, 15 to 20 different sections of the financial plan. Which is what? Balance sheet, income statement, and cash flow. Assumptions, list your assumptions. That is your thoughts to create those forms. That's pretty much what the pro forma financials is. All right? This concludes week 6, day 3, part 4, assumptions.